make a start. So welcome to this webinar on the 2 new codes for banking and lending. I'm Drew Donnelly. Pay no attention to that name on the screen there. He's our business manager, Stephen. I'm a compliance specialist at Compliance Quarter. And today I want to talk to you about 2 new codes for banking and lending. So this year there's been 2 major codes which have came out dealing with this topic. The first is the update, the refresh of the Banking Code of Conduct, which comes into force mid next year. And also the AFIA Small Business Online Lenders Code. So that's the banking code and the lending code respectively, which came into force in June with 6 signatories. So what I'm going to do is I'm just going to have a bit of an introduction showing the regulatory environment where these 2 codes have come from, who they apply to. I move into the specific codes and the details of those codes, contrasting them, and then talking about what some of the implications are for banks and other lenders. Okay, so first things first, there's been a lot of regulatory work in the business and lending sector over the past 5 years or so. One of the major things that's probably the biggest development that's coming into force at the moment and into next year is the open banking reforms, otherwise known as the consumer data right. So what's this about? Well, going back through several government reviews over the past few years, starting off with the Financial Inquiry, the Murray Inquiry, the Harper Competition Inquiry, moving on to the Productivity Commission's inquiry into a consumer data right. There's been a bunch of recommendations that we should have a consumer data right in general, so consumers having the right to access their own data and to share that with other providers, but more specifically in the banking data, in the banking context, a right for customers to have access to their financial data and data which can then be passed on to other parties. So the government responded to these previous reports and recommendations for open banking data earlier this year. They recommended that this right to consumer data be introduced, beginning with the banking sector and then moving on to other sectors, including energy and telecoms. So the first aspect of the open banking reforms comes into effect next year, in the middle of next year, with the big banks being required to introduce this right for some of their deposit and lending products. Okay, so that's one of the big things that's going on. The other thing I wanted to mention was the extension of the FinTech regulatory sandbox. So a couple of years ago, the government introduced a regulatory sandbox for specified FinTech businesses. So what this does is it exempts businesses that meet certain criteria from having to have an Australian financial services license or an Australian credit license and complying with the conditions of both those licenses for a period of time. The idea being that by loosening up those regulatory constraints, this will provide a useful environment, a sandbox for innovation in customers and fintechs developing their products. So there was an initial trial a couple of years ago, and then for this year it's been extended into a really broad range of financial and lending products, financial and credit products. So the next thing I wanted to mention was, of course, the FinTech Lending Code, which I'm going to discuss in detail. But this comes out of a joint report, which was issued earlier this year by the Small and Medium Enterprise Ombudsman, the Bank Doctor, and FinTech Australia jointly released a report observing that there weren't sufficient protections for small businesses when it came to lending by online outfits. And so this report recommended that a code be introduced, a voluntary code for those types of fintech lender. Something else I can't fail to mention is the Royal Commission into Misconduct in the Banking, Financial Services and Superannuation Industries. So the Royal Commission, which had its hearings earlier this year, just released its interim report at the end of September, where it confirmed a lot of what the public and various commentators and regulators had acknowledged at the time of the hearings, that there was serious misconduct in the banking and financial services sectors, and there needs to be consultation on a range of options to deal with that misconduct. The interim report is primarily setting out what the Royal Commission sees as the key problems in need of fixing. It's been open for consultation, and then the final report will go into a lot more detail about how to rectify some of the problems identified. One thing worth noting there is that the Royal Commission in that interim report really emphasised the way in which actually a lot of the conduct that has been going on is or appears to be against the law anyway. So it doesn't seem like what's needed is a law change necessarily, but it remains to be seen what options they will come up for dealing with the issue. But this brings us nicely to the banking code. So the banking code of practice, the revamped code, is the result of an independent review conducted by Phil Curry last year, looking into whether or not the existing banking code, which first came into force in 1996 but has been updated several times since then, whether that's still fit for purpose, whether we need a banking code at all, and if so, how it should be updated. So in that independent review released at the end of last year, the final report on that, Curry recommended that there should be a code of practice. There's something useful about having a code over and above law and regulations which guides the conduct of banks, but also a range of recommendations as to how that could be enhanced, specifically with respect to redrafting in plain English, increased protections for vulnerable customers, and increased disclosure requirements. So we will discuss them in a bit further detail shortly. So where were we? So as I mentioned, this review into the code of practice was looking at partially the fact that the code is already over 20 years old and might need revamping, but also a response to those, to the range of government and independent inquiries which have revealed problems with the banking sector. So in this review, it took into account both, it went out for consultation with banks and the public, as well as taking into account those other reports. So as I mentioned, it recognised that a code is valuable, identified some areas that need to be enhanced, specifically a lack of coverage for small businesses who need better information and enhanced protections with respect to credit. So with that recommendation, we see the similar impetus for the banking code of practice and the online lending code. as well, which is also motivated at introducing more protections, not just for individual consumers, but for small businesses. Again, identifying a need for better coverage for customers in financial difficulty and customers with special vulnerabilities like disabilities, and also recognising a need for an enhanced monitoring role of the code. The previous monitoring body, the Code Monitoring Committee, was seen as lacking teeth and not being particularly effective. Okay, so the updated 2019 banking code aligns with the outcomes of the Kuri review, the independent review. Again, a key aspect of the review and what's motivating this code is the idea that while there's a whole range of minimum protections contained in the law, such as the Corporations Act, the ASIC Act, the Banking Act, Privacy Act. There's a whole range of protections for customers already, but the idea is there needs to be something over and above that banks commit themselves to performing for their customers. In contrast with that previous code, this will be compulsory for all banks that are members of the Australian Banking Association by July 2019. So this isn't a big difference from the previous code, even though the previous code was voluntary. Over 90% of online deposits, sorry, not online deposits, deposits in general are held by banks which are signatories to the code, and over 90% of lending products are held by banks which are signatory to the code. So it's potentially expect a small increase in banks being signed up to the code, but since so many banks had already voluntarily signed up, not a huge difference. Okay, so what are the key changes contained in that code? First of all, upfront principles are introduced to the beginning of the code. The statement of principles at the start sets out the important things that need to be considered by all banks. They need to consider and all staff within those banks. They need to act with integrity. They need to act with transparency. They need to act with a service focus towards customers. And the idea of this is that these principles sit above the rules which are contained in the code and sit within existing law and regulations. It's one thing for a bank to tick off that it's met some compliance obligation, that it's complied with some rule, but it's an extra thing for a customer for a bank to adopt these principles and ensure in all its dealings with its customers, it's acting with integrity and transparency and so forth. Another change introduced in the Code of Conduct is a requirement for plain English contracts. So both disclosure before a customer signs up to a banking product, and in the product itself, it needs to be written in plain English. There's been a perception up until now that a lot of banking products are written in highly technical legal jargon, and that this has made it difficult for customers to understand what their rights and obligations are. It's also introduced a requirement for increased transparency around fees and valuations. So a range of fees are going to have to be declared upfront by the bank, and also how valuations are going to be carried out. Another important change is restrictions on unsolicited credit card limit, increased offers. So up until now, there's been too many banks, at least the independent review found, offering credit card limit increases and actually offering a range of other lending products to customers that don't have the ability to pay that. So there's increased obligations for the banks to determine what the financial means are of the customer before making those kinds of offers. Another element is the elevation into an industry code approved by ASIC. So that's the Australian Securities and Investments Commission. So prior to now, the code was a voluntary code created and administered by the Australian Banking Association, but it had no formal pedigree. What approval by ASIC means is that it's been approved under the Corporations Act as a code meeting certain criteria, including, for example, a requirement that they be reviewed every 3 years, a requirement that there be monitoring and enforcement of the code, and so forth. So this is, in some sense, formalised the existing code. Okay, part two, related to what I said earlier about the increased obligations around disclosure to customers before they sign up to credit card increases or lending products as a requirement for increased assistance to vulnerable customers. So this includes customers with any form of disability, but also there's increased protection for low-income customers. These customers need to have all banking and lending information explained to them very clearly before the customer signs up to something. They also need to be provided extra assistance where the customer asks for it. They also need to be given information about access to government concessions and rebates that might apply to them. Now, again, this is something that a lot of banks were already doing, but by bringing more substantial obligations into the updated code, it makes it clear to the customer what they can expect from their bank. Okay, the next change is simplified small business loan contracts. So again, this relates to the earlier observation I made that the contracts need to now be in plain English and clearly explain to the customer what their rights and obligations are. There's new cooling off periods, which give customers the right to renege or take themselves out of a contract for a certain period of time after signing if they change their mind. The updated code also clarifies the role of the Compliance Committee. So the Compliance and Monitoring Committee now has an increased role for investigating areas of non-compliance and also has the ability to look into individual complaints by customers. And as I mentioned earlier, all members of the Australian Bank Association are required to sign up by July 2019 when this comes into effect. So that's a rundown on the Banking Code of Practice. So what about the AFIA FinTech Lending Code? So I mentioned earlier that there was a report released in February of this year recommending that such a code be introduced, as there was a perception that while there's a range of protections for individual consumers, residential customers, there's not particularly strong protection for small businesses when it comes to accessing lending products. So the new code was established in June. So far, 6 fintechs have signed up to it, and it's voluntary for all members of the Australian Finance Industry Association. So unlike the Banking Code of Practice, this is not compulsory. Like the Banking Code of Practice, it is designed from high-level principles to detailed duties. Very similar principles begin the code of conduct. Again, with the idea being that it's not enough for there to just be a series of rules that a lender needs to comply with, they also need to implement ethical principles into their general behaviour. Again, like the Banking Code of Conduct, there's an emphasis on protections for vulnerable customers and clarity in all documentation and within the code itself. Okay, so what are some of the specific obligations contained within the code? First of all, there is a requirement for full disclosure of costs and fees, as well as, so before a customer signs up to the lending product, as well as a requirement to release pricing comparison documents. So there's been a concern that it's very difficult for small businesses to compare a lending product between two different fintechs because there's no standard way in which pricing information is conferred. Likewise, to compare information between a fintech and a bank to determine what the best lending product is. There's also requirements around communication and dispute resolution. So all communication is required to be in plain English, plain language. So again, like the Banking Code of Conduct, there's no information is allowed to be highly technical so that the customer can't understand what's going on. Similarly, before accepting a loan offer, customers will receive a summary document which sets out the key elements in plain English of their loan product. So this is a little bit similar to some of the changes that are happening in the energy industry, where all energy retailers are required to provide a new basic plan information document, a very basic document setting out at a high level a summary of the energy offer to the customer before they sign up. There's also a requirement in the lending code for internal and external dispute resolution mechanisms. So the fintech lender needs to themselves have a internal dispute resolution process, but they also subject to an external process. So the fintech could sign up to a particular ombudsman or other dispute resolution service, but whether or not they do, the customer will have access to the AFIA Code Compliance Committee as a dispute resolution body. The customer will only be able to make a complaint to that body if they are dissatisfied with the actions of the fintech lender and the resolution of the complaint. Okay, there's a new privacy section to the fintech lending code. So this affirms that all of the lenders who are signatories to the code are under obligations under the Privacy Act to follow the Australian privacy principles. So the Australian Privacy Act itself sets out which businesses and public sector organisations are required to have a privacy policy and act in accordance with the privacy principles. But this code confirms no matter what the business, if they're a signatory to the code, they are subject to those privacy obligations. Similarly, credit reporting obligations under the Privacy Act and Credit Reporting Code. So the fintech business is required to have a credit reporting policy as well. So these are all spelled out very clearly in the code. Finally, I just wanted to mention, and this is not exhaustive of all the requirements in the code, is new requirements around advertising. So all advertising and any other information about lending products must be clear, concise, and accurate. It must be written in plain language, and it must also use terms from the lending code. So at the moment, there's no standardization in the way these loan products are offered to customers and the way in which they're described, and that's led to a lot of confusion amongst small businesses as to what the best product is for them. The lending code contains a glossary setting out key terms and the signatories to this code are going to have to make sure that they use those terms in the code to ensure some consistency in the description of the products. Okay, so just to some of the key differences between the two codes. So the banking code applies to, obviously, being called a banking code of practice, it applies to all banking services. So that includes bank accounts, term deposits, all lending, credit cards, payment services, foreign currency exchange. So it applies to all those banking services. It's worth noting that it doesn't necessarily apply to all of the services that happen to be offered by a bank. So some banks, for example, offer financial advisory services, which are not necessarily covered by the banking code of conduct. They're covered by separate codes. By contrast, the lending code only applies to online lenders who loan to small businesses. And as I mentioned earlier, only those who are members of the AFIA and choose to sign up to this code. Now, I just mentioned that the lending code provides for a full external dispute resolution service. So whether or not the individual lender is signed up to an external dispute resolution body, the customer will still have the ability to take complaints to the CCC, the Code Compliance Committee. There's no special dispute resolution body contained that banks are required to sign up to as part of the banking code. Now, the banking code expects that banks are already signed up to dispute resolution bodies, such as the Financial Services Ombudsman, but that key focus, even though it can investigate problems with individual customers, the key focus of the monitoring committee for the banking code is general compliance issues rather than dealing with individual complaints. Okay, before I sign off, I just wanted to think about what are some of the implications for individual banks and lenders in terms of these codes. So I mentioned from the beginning, the idea with both codes is that this is something above and beyond legal obligations, regulatory obligations. They're seen as setting the bare minimum that a bank or a lender needs to meet, but by signing up to this code, banks and lenders are saying we'll do more than that. We will act honestly in all our dealings with customers, irrespective of what any other law says. So in terms of that feature of the codes, that they are aspirational documents for both banks and lenders, online lenders, need to consider how that code is going to interact with their other legal and regulatory obligations within their own compliance management system. So the bank needs to think about how these obligations relate to the obligations they also have under the Corporations Act. So obligations around obligations under the Australian consumer law, for example, obligations not to make misrepresentations or be misleading, obligations under anti-money laundering and counter-terrorism financing legislation, obligations under the Privacy Act, obligations under the Banking Act. Individual businesses need to consider how all of these different obligations are going to fit together with the code within their compliance management system. In some cases, there will be overlap. There's a lot of requirements. So what I just mentioned before, the requirement in the Australian consumer law not to be misleading, to the requirement in both of those codes to act with integrity or act honestly. Not necessarily identical, but certainly similar. So there will be some overlap between the obligations in both the codes and laws and regulations. Another thing that businesses need to think about is their disclosure materials and terms and conditions. So they need to make sure that all of those documents have been updated in terms of the new codes. Similarly, they need to think about reviewing their advertising and marketing, the new requirements for that to be made in plain English, and to be particularly honest and clear about what the obligations and rights of the customer will be under that product. Related to that, businesses need to think about staff training. So it's okay to have updated all your advertising and updated disclosure documents and contracts, but if staff haven't been trained in the new obligations under the code, then when customers have questions, so if a vulnerable customer has a question under the code, the bank or the lender needs to be able to explain in clear terms any question they have about the product. So staff need to be trained adequately about the new obligations so that they understand these products well. Finally, something to think about is incentive structures. So this was a major observation of the Royal Commission's interim report into misconduct in the banking, financial services and superannuation industries, that the incentive structures in banks in particular, but also financial services agencies, were not aligned with compliant behaviour. The incentive structures encouraged the agents and employees of the banks and financial advisors to sell as many products as possible instead of thinking about whether that's particularly suited to the customer. So in light of these new codes, all businesses which are involved in banking or lending need to start thinking about their incentive structures, whether they are identifying the way in which all staff and contractors need to comply with these obligations, and what happens if employees or contractors aren't complying with those obligations. That's all I had to discuss today. Thank you very much for joining me. If you have any questions or want further information or assistance, please contact us at either of these email addresses, either myself or Connor. And feel free, if anyone in participation has any question to ask me now, you're welcome to do so, but otherwise I will sign off.